is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Paul Martin with Investor Connect. Today we're here with Ram Kolluri, the founder and chief investment strategist at Expo-Wealth Management. Ram, thank you for joining us.
My pleasure.
So where does this podcast find you today?
I'm in Austin.
Oh, great.
I live in Austin.
Me as well. So it's great to be here. And so wanted to talk a little bit about your work in the wealth management space today. Can you tell us more about your approach to balancing traditional wealth management with access to alternative investments? How do you do that?
Well, typically when you're dealing with the clients of high net worth, ultra high net worth, there is a core requirement for performance. You have to keep the portfolio inflation plus 5 to 6%. That can be achieved through the public markets. But the problem is, no matter how hard you squeeze, you get only so much return in the public markets in S&P 500 type situations. But they don't capture the frontier of new technology, disruptive forces. So we have to necessarily blend alternative investments.
And so, your role of Expo Wealth is, you're democratizing institutional strategies for high net worth clients. Tell me more about that. How does that work?
See, private equity and venture capital investments are generally gated investments, and they are available only for high net worth. You have to be an accredited investors. That's number one. Number two, you really need to know what you're doing in terms of your due diligence. You have to understand your manager and so on and so forth. So I spend the time in getting to know the sponsor, the investments, and so that I can make the clients feel comfortable in allocating the funds. That's my main role.
I gotcha. And so what are you seeing out there in the private markets today? What are the trends? And, do they have appetite for venture capital among the companies and family offices that you're dealing with?
Yes, but it has changed a lot. 2 years ago, 3 years ago, when interest rates jumped, people were kind of edgy about it. But now with the new technologies, particularly artificial intelligence and things like that, there's a lot of interest in that. They want to participate. So yes, there is high level of interest about venture capital, private equity types of deals.
And what kind of deals are they looking for? What kind of sector, stage, or strategy are they using?
Somewhat not very early startups, but somewhat proven technologies, maybe what you call it, round B or something like that. So they just don't want to put the money to very early. I was listening to some of your podcasts, and even some of them bring some very sophisticated technology, a lot of research behind it and things like that. They want to improve their returns from the public markets going into some of these curated investments, but they don't want to put them into very early stages. That's my experience.
I see. Okay. So they're a little more conservative in that sense, although I will say at the very, very early stage, it is very challenging to pick the winners. It's just too many exogenous factors going on to be successful at that on a regular basis, but once in a while you do well with it. But tell me more about how you guys evaluate new fund managers and emerging asset classes. How do you pick the ones to recommend to the family offices?
Deep knowledge, experience, track record, so that you in this situation, to be honest, the investors and their advisors like me don't have the in-depth knowledge and experience in evaluating these investments. You can show me fantastic deal coming through. How many technologies do I really understand as an advisor? And let alone me and my client has to understand. So sometimes we align ourselves with experienced sponsors and managers who have been years and years of track record, and they've done substantial amount of work.
Okay, that makes sense. And so a while back, ESG was a very high profile strategy. People were using it for making impact driven investments into private companies. Where do you see that going today? What's the temperature among family offices around ESG and impact driven strategies?
I can summarize, at least from my end, ESG as within quotation, doing well while doing good. Really, the younger generations in these families are saying, yes, we'd like to make money, but we want to make a difference in the world. For them, we're all going through this climate change and everything, so they'd like to be part of a positive change. However, if it is just simply only the positive change, they might as well give a charitable donation. These days, first and foremost, the investment should make sense, and then you have an overlay of something positive in terms of the environment or whatever. But the performance plus overlay.
That's a good point. Oftentimes, the ESG or impact seem like we're giving up performance for the good, and it was always a challenge to weigh the difference between the two. So, I guess my next question is, how do you provide education to investors to go after the alternatives, the venture capital and the other non-public stock market opportunities for investing? How do you educate them on these things?
Well, for one of the things people freeze up is they're very afraid of illiquidity. They say, oh, Ram, I'm committed to this for years and years to come. I don't know, etc., etc. So what happens is most of the time, I take the role of an educator. I tell them that this is something that we have to do this in different ways to invest in small but regular basis. I don't try to sell them on the idea, push them into the alternative investments, but make them aware of, because yes, we can go into liquid public markets, but the problem is we had to move the needle, and the only way we can do that is by participating in these alternative classes. Institutional world across the board has moved approximately a third of their allocations to alternative classes. A lot of sophisticated, a lot of intelligent people, and they know what they're doing. They're doing it for a good reason. In our case, as a say example, my clients are saying, can you move the returns from inflation per 5 to say, can you take me to inflation per 8 and 9 or even 10? And that's nominal return of 12 to 15%. This cannot be achieved in the public markets only.
I get you. Okay, that makes sense. So, you work a lot with family offices and, how do you bring your insights on portfolio diversification in these current times? What do you do that helps make that recommendation, interesting to the family office?
Well, one of the things is that, as you can see, we're routinely trading S&P 500 around 2021. We moved up from 14, 15 now to 20. And to say to them that let's do more of the same S&P 500 and its variants, where is the diversification? Maybe I'm adding some value in a bit of a real estate, maybe commercial real estate, which is out of favor right now, and bring some private. See, actually, I was chairman of a investment committee for a large foundation and healthcare foundation with about more than $250 million. And again, the same thing, we made this to say, yes, you have to put some alternative investments, maybe different vintage, different years, different valuations, very, very important. Education is everything. Particularly younger people sometimes need to be brought on board by explaining to them, educating them, making them feel comfortable. Underlying the word making them feel comfortable, that's the only way they will come on board.
I got you. Makes sense. So you work a lot with family offices, and do you bring in independent advisors? And if so, how do you match the advisor to the family office and make the family office comfortable with that advisor?
Specialization. And, in the sense, I'm a generalist. I'm the trusted advisor to the family. I don't profess or claim that I'm an expert on everything. Nobody can be expert on everything. So usually what happens is when you're doing this venture capital or real estate or private equity, over a period of time you develop good relationship with these sponsors, advisors, and even sometimes other advisors who are already doing, because there's some amount of camaraderie and co-education. So the families feel comfortable if you're a part of a group of some sort. So it's something, shall we say, like a study circle, maybe, if you would call that. But these are all friendly competitors, advisors who come on board together. Because at the end of the day, with fiduciaries, and our entire existence is to serve and improve our clients' returns. We have no conflict of interest. We have nothing to sell.
And so, what's your experience in building trust with clients, while you're introducing, say, less liquid investment vehicles like venture capital? You're in the venture capital for a long time. How do you get them comfortable with that?
Again, the results of the sponsors speak for themselves. My God, the venture capital world has an experience with a track record of more than 25 years. These are nothing, they're not nothing shiny new objects. And they're people who have been a tremendous amount of knowledge. There are very large firms. I don't want to mention any names at this time. So you start slowly. You bring them into the meetings. You bring them into presentations. You kind of make them feel comfortable. Why don't we allocate, say, let us say, take 5% or 10% and then make that commitment every year, 2% or something like that. Build it up. In other words, you're not blowing up a whole portfolio, you're building it in small quantities. I think that, as I have had clients with me who stayed with me for decades, not one day or 2 days. And the only way I can do that is to say, tremendous of integrity, relentless fiduciary attitude to them. And once they trust you, they look at you and say, Rama, you're my advisor. I'm going to follow whatever you suggest. Boy, that carries a lot of responsibility and a lot of weight on your shoulders. So that's how you build it.
Well, so what's the next frontier for Expo Wealth? Are you going after innovation? Are you doing fintech integration? Are you just giving people access to deals? Where do you think the value will lie in the future?
One of the biggest demands is my clients and their family members want to know where are their investments. They're looking for something like a dashboard. They want to see where their portfolio is at while they're waiting in the airport lounge and their iPad. They want to see everything in real time, and they want to know. It's like Ram. I want to know at high level what at any given time what's going on. So that's one thing. That's a big frontier. So technology integration, they want to know everything. Where are all their assets? How are they doing? That's critical. Number one. Same thing is communication. They want to know. They don't want to get into a lot of detail, but they want to get the answer when and where and how. They want to turn around within. If I get a text message, I should be able to reply within the next 5 minutes.
Oh,
That's what they're looking for. And the second frontier is the lot of wealth transitions happening. Just to give you, in the next 10 years, unbelievable amounts of wealth is going to change hands. So running into 50, 60 trillion dollars, particularly in the private family offices. That's a known fact. So the younger generation need to be educated. Start educating them very, very early, where you start with them when they're in their teenagers to the college level and everything else. You have to educate them. That's the next frontier for us.
Hmm. Well, it sounds like the world is becoming very real time. People want instant information and access, and it sounds like you have to be available 24/7. How do you handle that?
First thing is you prevent questions. You actually communicate them at a real-time basis to keep them continuously informed. Whether you're writing blogs, emails, whether you're holding small, webinars. So information continuously pump them out even before they have to call you or text. If you have to wait for them to call you, you're in trouble. You have to be proactive. That's what we do. So actually speaking, on days when there's a lot volatility in the markets, we don't even hear anything because we have been communicating with them so regularly. They say, "Ah, Ram, you're there. I have nothing to worry about." That's a level of comfort we build.
Sounds great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
The markets have become very volatile. There's a lot of nervousness in the market, be it politics, be it geopolitics, wars, or whatever it is. There's so much money of capital that's still yet to be invested. And the investors, some of them are saying, I made money, Ram, I don't want to lose it. So the problem is because the investor tensions have dramatically risen in the last few years, particularly, I don't know, last 4 or 5 years, maybe, I don't know exactly. I don't want to be sound political. So it's to bring them into education, to explain to them, make them feel comfortable. The last estimation, I'm again just this is publicly available information. Some $7 trillion of cash is sitting on the sidelines. And while the markets are making new highs, this year we went we went down 20% and came back up 20% all in a matter of 1 month. Imagine if you blinked your eyes, you missed the markets. So we have a work cut out for us. If you're an advisor to a fairly wealthy family, I guess sometimes you have to play the role of say a psychologist and then sort of calm their nerves down a little bit, if you will call it that.
Wow. That's great to hear. Yeah, it sounds like it's a good process you have going there with your family offices. It sounds like you're on top of it every day. Well, great. Well, so we're at the end of our time. How best for listeners to get back in touch with you?
My company website is available, Exponential Wealth Management in Austin. I guess my phone number I can give if that is appropriate, or email address, but it is probably available as a part of my profile on your site. Am I right in saying that?
That's right. We'll include those in the show notes. Want to thank you for
Right.
joining us today, and we hope to have you back for a follow-up soon.
My pleasure. Thank you for the opportunity.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.